Hey, good morning. Welcome to the Mortgage Rate Forecast with Scott Criss, your mortgage rates and news. Today's going to be a fun day for us. It's January 12th, and let's start with the charts. Tracking the 3.5 coupon, and look at this, guys. I mean, this downward trading channel from the time of election, the Fed. I mean, it's just been a rough month. But you know what? There's a little light at the end of the tunnel. From about mid-December on, you know what? We've actually been gaining some ground. So mortgage-backed securities are trading pretty darn well. If you checked my my last video on Tuesday, I'd mentioned 103 is a big day. Currently, we're trading at 102.97. This is really big. We're pushing right up against our resistance level. Our support is quite a ways below us at about 102.30 all the way down here. So we are pushing up against this ceiling of resistance. This is actually a good thing. Reports came out today. Unemployment, not so bond friendly. Import prices helped us a bit. Nothing worth noting. But U.S. currency, man, not doing so hot against the other markets. Now, this really impacts inflation. So think about it. Inflation really, in fact, impacts investors quite a bit. So for instance, if an investor has some money in a 3% yield, well, if inflation's at 2%, their net profit is only about 1%. Okay, but on the other hand, if the economy's inflation is at zero, or let's just say we have a 1% deflation rate, which is not very good for the economy. Now that investors yield on that 3%, that 3% coupon might be 4% if there's a 1% deflation. That means the inflation or deflation of an economy has a huge impact on specifically bonds. So the U.S. currency is not really doing so hot. That's actually been some very bond-friendly news. The Dow is down about 150 points. President-elect came out and you know, investors were really looking at what is he going to say about fiscal spending. Nothing really came out. So that really wasn't too bullish for the stocks. And so anyway, our markets are reacting off of that. 10-year auction did pretty well. And so things are looking pretty darn good right now, guys. Here's to kind of quantify where we're at. Freddie Mac reported December. The average rate was 4.2, and the average consumer paid a half of a point to get that rate. Now, trading was at about 102.25. Currently, we're at 102.97. That's about 72 cents better. So if the average consumer was paying half a point, but now we're trading about 72 cents better, the consumer getting around that same rate might actually get a credit back instead of paying a half a point. So really, really super good news. For people that are getting mortgages right now, we're going in the right direction. So here's what we have on the forecast. Pretty consistent. Both the analysts are very bullish. The key thing is, I'm going to go back this other slide real quick, but the key thing is, can we close above 103? So today is actually going to be a pretty pivotal day because if we can close above 103, that resistance then becomes our support. So we're pushing up against it right now, but if we can close above it today, that's our new support. And man, we could be trading as high as 103.50, maybe even as high as 104. Probably not going to get back anytime soon to those 105 trading days that we saw here a while back, but still, today could be a very pivotal day. So I'm going to go a little bit more conservative than the analysts. I'm going to say we're going to probably trade between 102 and 30 and 103 up through next Thursday. I have a gut feeling we may not break it, but with enough good news, we actually might. So I'm kind of on the fence, guys, but hang in there, watch it really closely. If you can float right now, I wouldn't object to that. You know, if you want to hold off and kind of see what happens and where things close today, I don't think that's a bad idea. If you want to play it safe, one thing to consider is watch where we close today. And if we close below 103 by 2 p.m. Pacific time, you know, if you want to play it safe, log it in then. But if we can break through 103 today and close above 103, I mean, my call, if it was me getting a mortgage, I would probably float it out and kind of see where it takes us, because it could take us to some pretty darn good places. So anyway, that's it for now, guys. That's the forecast. We'd love to hear from you. So down below, leave a comment. Let us know what you think. Let us know what you think is going to happen with mortgage-backed securities. Are we going to break through 103? Tell us your vote. And everything likes to be liked, so does this video. Hit that thumbs up before you go. And you know what? If you're new to it, or you're thinking about getting a mortgage, or maybe thinking about refinancing in the next few months, and you just want to kind of get a pulse on the market, see what's happening. At the top left, click on that ugly face you see right there, and that will subscribe you to the YouTube channel. And if it's your first time on this channel and none of these charts really made sense to you, and it's like, hey, how does this trading stuff impact me as a consumer getting a mortgage? At the top right, that's going to be a link to Mortgage Bonds 101. Give you the basics, the things that you need to know on how this impacts you as a consumer. Anyway, that's it for now. We'll see you next Tuesday. Have a great day. Have a great weekend. Bye-bye.